Good morning, everyone. Good morning, everyone, and welcome to the analysis or usual analysis of the American markets. Today, the American markets continue their upward trend, which has been underway since Monday morning. In fact, it's been 2 months that we've been on the rise, but on Monday morning, it seems the market gave an additional significant upward push. So the market continues to rise, riding on the back of relatively, let's say, calm geopolitical situations from a certain point of view. Because Trump, in short, has, let's say, he intervened authoritatively in the Iran-Israel issue and immediately reassured both Prime Minister Netanyahu and Khamenei. He told them, okay, ceasefire, no more shooting, I've decided it, and everyone seems to be obeying in a rather, let's say, precise manner. And so the markets are definitely appreciating this kind of approach, even though Khamenei from time to time comes out with some statement saying they've dealt a heavy blow to the United States. No one really knows what he's talking about. In any case, let's say that for the moment, the geopolitical situation seems fairly stable and calm, which is obviously something the markets appreciate. On the other hand, from a macroeconomic perspective, yesterday the data on new home sales in the United States was released, and it was not good. The decline was greater than expected, even though a drop had already been anticipated, but it turned out to be larger than forecast. And this morning, a figure was released, the index, I believe it's called the CBI. At noon, the CBI index came out, the UK distributive trades, which is actually an index that, let's say, measures the willingness of end consumers to spend. This index was expected to be at 24.5, up from the previous 27, so an improvement was anticipated, but in reality it worsened quite a bit and came out at 46. So from an economic standpoint, things aren't exactly going great, but probably the markets are appreciating the fact that while things aren't going great, they're not so bad as to suggest there's a recession underway. And so this situation not going great will certainly help cool down inflation and obviously lead to a reduction in interest rates. So the interpretation I'm giving right now is along these lines. We'll see a bit later what the markets will do, but for the moment, let's say this interpretation could be valid, and that's why the markets are appreciating significantly high prices, close to all-time highs. We know that in the stock market, you can never really talk about prices being high, too high, or too low, right? But we are definitely at price levels that are, well, we are at levels close to all-time highs. All right, now let's carry out the volume analysis with our platforms and try to understand what scenario might unfold between today and tomorrow. All right, as we can see, the Nasdaq is moving very positively and continues to rise. What I don't really like at the moment, if you remember, yesterday I told you to be careful because here it's forming a low volume area. Okay, the price is trying to establish acceptance in the upper part. As you can see right now, it's true that at the moment the price has reached the highs during the pre-market phase, that is during the European session. So now we have to wait for the RTH when the American market opens to see if the market will accept this area or if it will be rejected from here and return to the area around 22,420. Certainly, as you can see, this distribution is very well distributed. It has a very well, let's say, balanced finish. So what does this mean? It means that if the price isn't able to break out from here and create an acceptance area even higher up, this indicates, well, this is the classic shape of a volume profile that has reached its highs. And from here, we'll tend to pull back and then possibly even go on to distribute in the lower part. Always pay attention to this low volume area between the 2280 and 22,220 zones, which was created by an opening up, I think, between Tuesday and Wednesday, or between Monday and Tuesday, I can't remember right now. In any case, be careful with this low volume area as it is very, very tricky at the moment. On the other hand, It's also true that yesterday the Nasdaq showed, let's say, very strong selling pressure in the early afternoon, which influenced the market's performance throughout the day because the market was gradually declining. But in the end, during the close and even in the morning, it seemed to have completely rejected and absorbed all that short selling. And let's remember, there's a saying, at least one we've coined, that if the short doesn't go short, then it goes long. The market then goes long. So what does this mean? So we need to pay attention to this very well distributed, very well formed finish, which could signal a return to the POC. Okay, at 22,420. What should we point out? That in any case, we're opening with a gap up compared to last night's close, which was around 22,480 or 470. So we're opening with a gap up, and this could make it easier for the price to return, let's say, to this redistribution area. It's important to highlight this area. So as you can see, the close is right in the low volume area we pointed out earlier. Therefore, the market could actually return to the low volume area, and then we'll see here in this low volume area whether it has the strength to reject or not. This is one possible scenario. The other possible scenario, of course, is that the market keeps surging, moves away, and creates an acceptance zone here. Obviously, why am I mentioning all these scenarios? Because it's our job as traders, especially those of us who use volume analysis, to constantly analyze the scenarios that are, let's say, that are developing in the market. Only in this way, only by understanding how the market evolves, can we, of course, be able to grasp what its next development might be. If, on the other hand, we stay stuck on what we see at this moment, obviously we're no longer taking into account, well, what we see right now is already in the past, okay? Of course, the past it's clear that the past also shapes the future, because what was built, meaning from the lower part already, starting Monday, then had an impact on the subsequent rise. But it's obvious that it's still always in the past. So we need to take it into account for the development of possible future scenarios, but we absolutely must then check in real time whether these scenarios are actually occurring, or if there's a change in state, a change in the market's form. This is absolutely very, very important to always keep in mind. To give a very, very practical example, if you look here, this is a long position I took a short while ago on the rebound. On the rebound of this, you see the market seemed to be pushing short, but it was precisely the constant and continuous analysis of the market, okay, that made me really, especially on certain dips that were happening and so on, by using the vol book and therefore looking at the market under the X-ray, what it was actually doing. It made me understand that when the market reacted and rejected with this C down here, with this failed short attempt, when the market rejected, I realized that when it recovered the lows, that was the moment to get back in long. And in fact, I got back in long, and I just closed one position on the return to 580, after which it failed to break the previous highs. That is, it broke through, made a fake move, then came back down and closed my position, also considering everything we've been talking about, and of course keeping in mind all the warnings I've given you so far. So which levels should we definitely be watching? The 22.0 area, 22.600 and 23.630, because you can see that the high here is the peak of these two weekly candles from before the so-called Trump tariffs. So this will be a very important area, and the market now seems to be very close to it, only 30 or 40 points away, and it really looks like the market wants to go and test it. As for the supports, 22,480 is a level to watch very closely. Pay attention to last night's close, which was exactly at 22,480. Be careful, because we have this area of low volume, so you can see how many things a trader needs to pay attention. That's why a trader must constantly analyze the market and stay on top of things. There's no alternative. And be careful, because this is the distribution that could be at the top, so the market could reject from here and return all the way down to the 22,220 area. I wanted to show you what happened yesterday on the Nasdaq. So that big short position that came in and was then absorbed. You see what I'm talking about. Here you can see how many, look here, this was yesterday, It was a very clear short because right here you can see this is our algorithm, the vol analyzer that we have on our platforms. And here an absorption zone had formed, which was then broken, okay? Then here many zones had formed many zones of absorption, or rather of pressure, sorry, of short pressure. So the market was pushing. So after absorbing and breaking through the absorption, the market was pushing strongly to the short side. But as I posted a picture on social media, there was a lot of shorting, but the market wasn't extending. And how can we see that? We can see it from all these bars that the market kept forming without being able to extend. Yeah, and this was obviously systematic. The last so-called breakout bar created a fake out that was really, really narrow. You can see how little volume there was here. The market basically rejected this level. We created new pressure lines. Look, this was beautiful because we created pressure lines with the vol analyzer algorithm and absorption zones also with the, let's say, still with the vol analyzer algorithm. This means that the market rejected the lows without volume. Okay, it went up, created long pressure, absorbed the short, and from here you can see how it landed in a surgical way. Unfortunately, this happened at night while I was sleeping precisely on the dynamic VWAP and on the vol analyzer zones. And from here the market started to move up again. So our indicator was showing Ashas perfectly shown as the failed short, the renewed long ignition, the absorption of the shorts, the test with practically no volume on the dynamic VWAP, and this was the quintessential long point, the ideal long buy entry point to go for a purchase, so to speak. So having said that, I think I've covered the analysis of the Nasdaq. As for the SP, it's still a bit stuck around the 6169 area and hasn't yet made the extension that the Nasdaq did to 6207 and then later to 6250. So we'll see if today the SP will be able to break out of this area, this zone that it currently can't seem to, let's say, leave, even though, I mean, the Nasdaq is very strong. Unfortunately, the Russell and Dow Jones were more or less moving in the opposite direction yesterday, so the SP wasn't able to fully take advantage of the strength that was present in the Nasdaq. So the first target for the SP is definitely the 6207 area. The second target will be the 6246 250 area, but it's very important that a breakout happens from here and that the market, I mean, manages to leave this area, because you can see that even for the SP there's a finish area, let's say, quite significant. So if we can get out of this area, you can see it's building a new volume area. So in the over, that is in the ETH, it's building what we could call a new volume area. So in order to, let's say, give confirmation of the upward move, it absolutely needs to break out in this area and start building volume above here. So the SP is in this situation, which is much more, let's say, delicate compared to the Nasdaq, which is definitely extended further. And as for a note on the SP, pay attention to this level 6150, because as we saw yesterday, 6140 was absorbed many times. Here an ignition was then created. You can see our indicator, our algorithm, the vol analyzer, which generated the pressure line, okay? But at the close you can see how all the long pressure that was there wasn't able to break through it, managed to break through today. So it will be very important that the market does not pull back from this area, because a return below the 6150 areas, or below this area, below this zone of major absorption, you can see how much volume came in even before the close, since it was 9:52 p.m. and so on. You can see how much volume came in even before the close, but it still didn't manage to break through. So the market opened without the cash market being open and moved up. Therefore, it will be very important that this breakout is confirmed, that today volumes are created above this level, volumes to hold this level. So for now, I'll say goodbye. Today I went on a bit longer than expected, but there were really a lot of elements to consider. Always be very careful, because as you know, trading is something very risky, and losing money is very simple and easy, much more so than making it. Goodbye everyone. Have a good afternoon and happy trading to you all.